Hey everybody, great to see you here this afternoon. I hope everybody's week is off to an amazing start. I wanted to welcome you to Holistiplan's webinar series, where we give you the tools that you need to scale tax planning at your firm. My name is Laura Bolio, and I'm the VP of Marketing here at Holistiplan. If this is your first time joining us, welcome. We're so glad to see you. And if this is not your first webinar with Holistiplan, well, you already know that you're in for a very special treat. As always, our goal is to deliver the maximum amount of value to you to bring to your practice to the next level and to deliver even more value to your clients. So before we jump into it, I actually have some pretty exciting news that we are super proud of here at Holistiplan. So officially, as of last night, Holistiplan was voted the #1 tax planning software in the T3 Inside Information Survey for the 5th year in a row, which we are super, super proud of. And not only that, but we also earned the highest satisfaction rating among all tax planning tools. And this means so much because it was advisors who voted for it. This award was based on anonymous feedback from over 2,000 advisors, making it a real testament to the impact that Holistiplan has had in their practice. So from myself and from everybody here at Holistiplan, we just wanted to say thank you for your trust. Thank you for your feedback and for making us better every single day. We're so proud to serve this incredible community. And we're going to keep innovating and making tax planning even more accessible and efficient and impactful. So super, super proud of that.
Yay, that's huge. And you guys, it's not just all tax planning softwares. I feel like all the KITSIS surveys and things like that, you're top rated software across all tech in a lot of those surveys as well. So it's not just tax planning, it's everything.
Yeah, it was, I mean, we were waiting on the edge of our seats for those results and we got them and it was just like celebration, celebration.
Yeah.
So, okay, now into the meat of it. Today we have an incredibly special guest, Emily Rassam. Emily is an Investopedia Top 100 advisor, and she's a partner and senior financial planner at Archer Investment Management. You might remember Emily from our tax planning summit where she was the breakout star. There was so much demand for Emily, we invited her back for a whole series last year and this year. Now, before we jump into it, yes, this webinar will be recorded. If you have any questions, please drop them into the Q&A. We're pretty good about answering the questions as we go. And if there are any that get left over that we don't get to during the webinar, we will certainly answer those in a follow-up email. Within the next couple of days, we'll send out a recap email that will have the recording, it will have the slides, it will have any answers to the Q&A. And with that, oh, Emily, we need to talk about CE credits.
Oh, yes, that is very exciting. So starting at my next presentation in April and some other Holistiplan presentations in April, there will be CFP CE awarded. So we just found out about that as well. So in the rest of the series this year, we're hoping to get at least the next 3 we know will have CE credit for CFP. Yeah.
Just trying to add even more value to your firm. I mean, we know
Always.
you love to come and watch Emily, and now we want to get you CE credits for it. So with
Yeah,
that,
even more reason to come to these, right?
yeah, absolutely. All right, Emily, I'll hand it over to you.
Cool. So I'll answer kind of some of the common questions I get. So before I dive in, people typically want to know why am I here, the size of my team, and what my tech stack is. So I'll just share a little bit of my background. So I've been an advisor for 18 years. I'm a partner in a small RIA out of Austin, Texas, but we're fully virtual. We tend to work with mid-career. A lot of people tend to be tech professionals with equity comp, but kind of mid-career, early retiree tends to be who we work with. So there's a lot of tax planning strategies, especially for those early retiree, pre-retiree, and into that early retirement timeframe, and some tax planning strategy with equity comp as well. That's our typical niche. Our firm is structured. There's 2 advisors, myself and my partner, and then we have 5 support staff who help us. There's 2 people who help with planning. We have a trader, and then we have 2 people in operations. So size of our team, that helps us to, I have support in different areas that help to kind of build some of the reports for tax planning, but ultimately everything that my clients receive from a tax planning perspective comes directly from me. Ultimately, all of the recommendations and strategy. Size-wise, we have about 220 families that we serve, 320 million assets under management, and we're how we structure. I always get this question in the Q&A. That's why I'm hitting all of this on the front end. So we charge AUM fees against the portfolio, and that includes all of the planning that we do. So that's just a personal decision that I've made, that we don't charge separately for tax planning. We include that in everything that we do. However, I know plenty of advisors that do kind of have modules where they then charge separately for tax planning, kind of packaged together, doing the Holistiplan tax report and scenario analysis and tax letter, and packaging that as an additional add-on service. So for advice only, or a flat fee type of advisor, sometimes that's an additional add-on that I've seen. It's not something I personally do, but it's something that I have seen happen as well. So I always get that question. The other one I always get to is what my tech stack looks like. So my main financial planning tool we use is Right Capital. We use WealthBox CRM system, and we use Holistiplan, of course, and we have some additional tools that we use like Jump AI. And ultimately, all of our clients receive a full Right Capital plan. We do full financial planning with everybody, and I also go into Holistiplan for every single client. With the exception, like some of my clients' kids or, just legacy clients, maybe not, but really most of our client base, we do go in and use kind of the full set of tools from Holistiplan across the board. So today, I'm going to jump into our topic here, which is really age-based milestones. I really think of this as a people business. So even though we're talking about tax planning and financial planning that's math-based, really being proactive is really what's going to continue to keep our clients happy and engaged with us, and also feel that they're receiving a lot of value. So the value that comes from just a quick reach out, to say, hey, I know that your son, Ryan, is turning 18 years old. It might make sense for you to go talk to your attorney about getting healthcare power of attorney for him. So having some of those just quick reach outs, that's something we're going to talk a little bit today about. Why, of course, you want to potentially weigh in on some of these age-based milestones, what some of them are. I had on my LinkedIn post this morning kind of a whole list of ages and asked people to guess what the age-based milestones are. You will be shocked and blown away when you see the Holistiplan tools that start to carve out all of the different age-based milestones that your clients might be approaching, and then how at scale that you might be able to then get reminders out to your clients and proactively reach out to them. Ultimately, I hate when a client learns about something from somebody other than me. So if a client says, I read this article about, dependent care FSAs or Roth conversions or doing a healthcare power of attorney for my 18-year-old that's going off to college, those types of things, just being in that position to just catch them first. Don't let them read it elsewhere, because at the end of the day, even if you help them with that question, if you weren't the one that brought it to them, you're not going to get that credit. And so there's a lot of things that we know. Part of it is just how do we make this easier to execute on? So I'm going to show you some tools today that will help with that. Yes, you will get all of my slides. You will get the recording from this as well. But I want to think about, sometimes we kind of think about, it takes some time to do proactive service. It takes some time to ultimately offer these additional tools and services for our clients, and our time is expensive. Every consultant will tell you to calculate your time value, but also how expensive is it to have a lack of communication, to not be proactive? How expensive is that to your relationship? How expensive is client loss? And to the client, how expensive are missed tax savings opportunities? So if you've ever had a client who came to you that really didn't know, the last 6 years about contributing to a dependent care FSA or maxing out their HSA account or, capital gain harvesting or something like that, how expensive is that overall in their overall picture? So that's something just to be thinking about as you are kind of building in some of these services as a retention marketing strategy. So we often think about marketing as going out and getting new clients. I also think about and specifically have marketing tasks that are for our existing clients. So it's important to me to continue to kind of market to them and reach out to them. Okay, first we want to identify who do you want to help, when, and how. So we look at the list of all the different age-based milestones, who on that list makes sense for you to potentially reach out to, when and how do you want to do it. excuse me, we were just talking, Laura and Tracy and I were just talking about the sicknesses that have been surrounding, so I apologize. I'm gonna be sipping on some water. I'm getting over this tickle in my throat. So going into Holistiplan, if you have not seen this before, this is gonna blow your mind. This is a really good place to start if you're thinking about starting an age-based reminder kind of system here. Have you ever been here? So if you're logged into Holistiplan, going into filter age reminders, and if you've not seen this before, this, I swear to you, this is gonna blow your mind. These are all the different age-based reminders that Holistiplan can create reports on and email you about. So if you are not currently utilizing this area and you've not turned on those emails, go do it right now. So I want to take you into the email reminder system. So right here on this page, so you're in households, filter age reminders, update your age reminder digest preference. All you have to do is check this button here to turn on a weekly age reminder digest email. So you get an email, or the main person who has the Holistiplan account will get a summarized email of everybody who's reaching that milestone. And you can potentially then act on it there. The other way, how I prefer to kind of utilize these tools, is to run those reports at the beginning of the year. You can run a report of all milestones coming up, or you can decide or kind of pick out one. So if you wanted to go in here and say, okay, I'm going to use that healthcare power of attorney. So you have clients that have kids that are age 17. They're aging out of the child tax credit. That's another milestone kind of at age 17, kind of going into that age out. But for them to potentially get that healthcare power of attorney document together, or reaching that age of majority for UGMA accounts that at age 18 become theirs. If you essentially want to pull that list, you click on that, and then you can click on, do I want to see people who are approaching this current year, next month? I'm going to click on current week. So my one demo person that's in here that has a 17-year-old, this accumulator family, they have a child who today turned 17. So they're going to be next year kind of reaching that age 18 milestone. So if I had the age reminder set on for that, this would be part of the digest email that I would be getting. Or I can go in here and pull the report. So I like to, at the end of each year, so in December, we send out an email to all of our clients across the board about, usually it's right around December 1st. We send out, here are some potential tax moves to make before year end. So make sure you've maxed out your 401k contribution, check your contributions from payroll, make sure you're maxed out by the end of the year. Otherwise, maybe bump that up. So we have just some basic reminders that might be relevant to everybody. So really generic type of thing. Make your charitable contributions by year end, make sure you take your RMDs by year end. So those reminders are in there. And then we also have our processing deadline. If you'd like our help with any of these items, please contact us here by this date. So we give them a deadline. Below that, I have typically, if you are turning age 50 next year, you can now do catch-up contributions in your 401k. If you're reaching age 55, you can make HSA contributions. So I like to first kind of put it out there in my year-end email. Every single year on December 1st, they're getting those reminders. If you're reaching these key ages, we put a few on there. Additionally, I go in here and pull reports of who's approaching next year a particular milestone. So I'll go in here and look at who is approaching age 50, and then I'll have a separate email that I push out to those clients. So sending them an email to say, hey, you are reaching age 50 next year. You can make a catch-up contribution. This is what the contribution limit looks like. Make sure you go into your 401k and adjust your contribution settings. So doing that all at once, or if you prefer to just have a few proactive check-ins that you're doing throughout the year, receiving that email digest allows you to then pick up on all of the potential opportunities here. So this is a big reason why you want to add your clients' kids' dates of birth into Holistiplan. Make sure all of your clients are in here, even if they haven't supplied a tax return to you, because it allows you to pull all of these different ages. There's a huge list here. So when you go into your household, I'm going to pull up that accumulator household that has that 17-year-old. I'll show you what that looks like as well. You can also add a tag for that household. So now I'm in the household here. And then you can go in and see what ages your clients are. You can pull those reports, and then you can also add different tags. So I use these tags in a bunch of different ways. One, I like to know which clients are currently doing Roth conversions each year. I like to know who has inherited IRA accounts. I just have a tag for people who have kids in general, because that just helps with overall communication strategy or kind of knowing what might be top of mind. And then for this one, right now, their 13-year-old is kind of aging out of that dependent care FSA. But I had a tag on this one because they were under that age, and that was an opportunity, planning opportunity for them. So it just allows me to kind of then be able to pull some reports of all the clients that hit each of these tags. This is a great way to potentially then categorize who you want to potentially support with that. So figuring out who. So your first action item is to go to that big long list and see which ones make sense for you and what you want to reach out to. Sure, if you reached out for every single client for each milestone they approach, that'd be fantastic. But we know that when we're starting something new, it's picking which ones are the most important to educate your client on, and what do you want to make sure they learn from you. So the ones that I like to maybe start with would be that age 50 catch-up contribution, and then age 55, maybe this year because of that mega catch-up 60 to 63 years old, that's new. That would be a good thing to potentially reach out to clients specifically about. But having those proactive check-ins that you are scheduling, you can also schedule those emails. So having a personal email that you reach out to that particular client, that's an additional touch point that feels a lot more personal. So we send kind of a blast to everybody in December so that they kind of know if you're approaching this age, this is something that's relevant to you. Then I send a separate email that is, you're turning age 50. This is something that comes as kind of a second touch on that. And then in the financial planning meeting, so when we do our annual review where we're looking at everything, what I have is an age-based list that I look at, and I just kind of scan it and say, okay, which age-based opportunities are potentially out there for this client? Or as I'm in Holistiplan, seeing that tag kind of come up. So there's a bunch of different reminders. We know that clients don't always act on something the second they hear about it, but being able to kind of touch them a few different times potentially makes sense. So pick out which one thing you want to start with, and utilize that Holistiplan report to get you there. And then turning on the email reminders is another way for you or the person on your team that receives that Holistiplan email to get that reminder so that you know, okay, we are approaching that age. One thing the Holistiplan has done is they have done kind of a half age before some of those milestones. So for age 26, for example, when a child is going to come off of their parents' healthcare, if they're on their parents' healthcare, the reminder is set for age 25 and a half. So it allows you to be more proactive, just like healthcare power of attorney is on for age 17. So we're proactive about it. We're ahead of the age that they're potentially reaching. So those reminders allow you to then have a good reason to just touch base and send out a friendly note. I love to use this phrase of, hey, Allison, I was just thinking about you this morning. I know you're approaching this milestone age. Have you gone in and adjusted your 401k contribution yet? I think that's relevant for you. Let me know if you need anything else on this. So keeping it really personal and friendly. In my CRM system, I also have a pinned note for every client about what the potential future proactive check-in opportunities could be. So that's something where if we haven't heard from a client in a while, I have a schedule to proactively reach out to people. And I hate to hunt for that information. So if I have to go back and read all the old notes, and read all the emails, and read all the tasks, I'm just not going to do it. So at the end of a prior meeting, if I go in and say, okay, we talked about this is something to proactively reach out about. So I just had a meeting with a client this morning. She's receiving an inheritance. A home is being sold. So her father's home is being sold. That money might be coming in a few months. I just put a pinned note in my CRM system to just say, reach out to her and see how that's going. So that when I'm coming up on doing a proactive reach out for her, I already know what I want to ask her. So doing the same thing with scheduling or setting yourself those reminders or notes to potentially reach out to people. This is a huge area. And especially when you're identifying opportunities that impact our clients' children. That's why I picked a couple of those. I know that I get some maximum mileage from that because that's really a way to show that you care about the whole family. So I'm going to go into some Q&A, and then I'm going to touch on some of those specific age-based reminders and do a little bit of that as well. I had a question about if we have an account minimum. Yes, we do. Our minimum is $1 million AUM. Are we able to add children and birth date into Holistiplan? I've only added in the spouse if filing joint, or did I miss something? Yep. Let me take you in there and show you what that looks like. Okay. Very easy. Once you're in the client's dashboard here, you can create and you can add anyone related to that family. So you can add in child 3, first name, last name, and then add in their date of birth right here and create client. That's how we go in here and add in child 1, child 2, and their dates of birth in here as well. Because as you know, dates of birth are not on the tax return. This is something that you can add in here as well. Or if you import or connect your CRM, you can do that as well. So this is something that I added in here with their dates of birth. And that's just part of when we are uploading, kind of setting somebody up in Holistiplan originally, uploading their first return. We just go in here and add that a little bit additional information because it just gives us the ability to have some additional reports and reminders and the opportunity to just add this value by adding these proactive check-ins that are meaningful to our clients. So Amy asks, when showing Holistiplan reports to clients, how do you avoid providing tax advice as a financial advisor? Is it just a disclosure at the bottom of the report, or is it additional action needed? Yes, so this is something that we make clear to our clients when they come on, when they onboard. We explain to them what the difference is between tax planning and tax advice. We also tell them kind of where our service kind of ends, where the CPA picks up. And in a lot of cases, when our clients have a CPA, we talk about it being a collaborative relationship. So I love the word collaborative here, talking about how we will communicate with their CPA going forward. So how we communicate with their CPA going forward includes, and you can actually catch this in my, I think the last presentation in February is when I talk about this specifically. As soon as we find out that a client has a CPA relationship, we email the client and ask them for official sign off on us speaking to their CPA directly. We basically say, until you tell us otherwise, we'll continue to communicate directly with your CPA. Once they sign off on that, we email the CPA an introduction saying, hey, this person is now a client. I understand they work with you. And this is how we work with them. We'd love to communicate directly with you and have a good collaborative relationship. I just had an email from a CPA yesterday come through, and it said I did a tax letter for them explaining what had happened with a bunch of 1099s that were received from rollovers and distribution. There was somebody who retired, consolidated a bunch of accounts. They had some after-tax money in their 401k. They had a lot of tax forms. And so the CPA basically reached out to the client and said, hey, what's going on? What happened last year? And so we had sent over the tax letter with the explanation of everything. And he wrote back in all caps, I think there were 13 exclamation points. This is very, very helpful. And he said, as you know, the 1099s don't tell the whole story. So being able to communicate exactly what happened, that's exactly what we're here for, is that we were involved in all of those moves. What ends up on that little tax form doesn't tell that whole story. So we like to be able to communicate that to them. So having that open collaborative relationship also means that as we are working on their tax planning, we keep the CPA in the loop. So same client that I met with this morning, we're planning a Roth conversion later this year, $120,000. Already emailed the CPA today saying this is something that we're considering for this year. If you are, as you are working on their 2024 tax return and you're advising them on estimated quarterly tax payments, keep that in mind. No other income changes that I'm aware of, but we're potentially doing this $120,000 Roth conversion. And so they've already wrote back and said, yep, we'll include that. Thank you. So that type of collaborative relationship helps us to not cross that line. But the best resource, Amy, that I've seen is on kitsis.com. They have a fantastic article, and it's super, super long in Kitsis fashion. And it has a table on there that talks about tax planning versus tax advice. So being able to project forward and project future taxes, like in the Roth conversion calculator, that's something we can do as planners. So we're projecting longevity, we're projecting returns, we're projecting a lot, we're projecting future taxes in a report. The other thing that I typically do is instead of sounding like it's my advice, it's saying, here's what the report says. So I'm going to walk you through the report. I'm going to talk to you about the inputs that go into the report. We talk about outputs. Talk about what's going to communicate to your advisor, how we came to this. And then ultimately, when we're making big moves, very often I'm emailing the CPA and saying, hey, here's what we're thinking. Does this make sense to you? Would you advise the client to do this? So it's just continuing that, and having direct communication with the CPA also helps with that too. So when it comes to age-based reminders, I don't see that as tax advice unless you are telling them exactly how to put it on their tax return, or if they should do something other than just considering an opportunity. So ultimately sharing with them, they have the opportunity to save more in their 401k plan. Your retirement plan that we ran for you shows that that's favorable right now, or to continue to do that. So Gail asks, are the emails in written form, and do you have a template? Yeah, I'd be happy to share a template. So I have different templates that I use. So specifically for that age 50, just so you all know, when you get this template, I tend to be a little bit more friendly and low key in my communication style. If you prefer to be super professional and proper with your emails, obviously reformat as necessary. But I typically joke about the milestone birthday coming up, and then remind them what they need to do and offer additional support. Somebody asks, a little bit off topic, but can you speak to how you leverage Holistiplan with clients with RSUs, especially if you have any case of a client's employer going public? So RSUs don't, ultimately you're plugging that in as income, right? So there's, I think maybe, Michael, you might be wondering about more stock option exercise planning, because that's a little bit more from a tax planning perspective. The RSU planning aspect, really the biggest thing with RSUs is ultimately, what as they're being received, the RSUs essentially is considered just additional compensation, and often they're not withholding enough taxes because they're just doing the supplemental 22% tax rate. For some of our clients that make $1 million a year, where 200,000 of it is income and 800 is RSUs, we run into that a lot. Or maybe it's just under $1 million. They're withholding that 22% when really their effective tax rate is a lot higher than that. So going into the scenario analysis and then plugging in what we're expecting their RSU income to be for this year, and then making sure that they're paying estimated taxes, working with their CPA to pay estimated taxes on the RSU income. And then ultimately, if they have an event, we can kind of model that out as well. So what you essentially do in that scenario analysis is then model forward to say, okay, if we're going to sell, if there's going to be a big gain on the sale of the investment, then we can kind of model that out going forward and potentially help communicate that to the CPA as well. We also work with some of the CPAs that we work with, specifically work with clients with equity compensation. So we loop them in on big stock transactions, stock exercise, things like that too. But going in scenario analysis and plugging in what you potentially expect to happen will help to calculate on stock option exercise, like the AMT fields are in there as well. So you have the ability to look forward to that too. Okay, I want to talk about some of the different age-based milestones. So I'm thinking some of these might not be on your radar. So I wanted to share a few with you. I want to talk about how I talk to some of my clients about these ages, but also if from this slide deck that you create that resource for yourself, essentially if you review the list from Holistiplan, review the clients that are coming in, adding just that additional element of adding these proactive check-ins can just add a lot of value to what you're providing clients. So this covers a lot of different topics. So when kids are young, looking at dependent care FSA opportunities. So typically you're going to be able to contribute into a DC FSA, a dependent care FSA, if it's offered through work only. So there are no standalone DC FSAs out there. Typically their employer has to offer it, has to be through payroll. And contributing up to $5,000 per calendar year, and it has to come back out for those kind of qualified reasons. So typically it's going to be for daycare reasons. That's the biggest thing. Nannies that you're paying through payroll, you can take out DCFSA money for that. After school type programs, so care-based programs, and then day camps, summer camps, no overnight camps. They're like really strict about that for some reason. So the opportunity really is when they're prior to age 5, prior to entering school, there's usually a pretty big opportunity. If their kids are in daycare or have a nanny, they're paying through payroll, or preschool of some sort, you're typically going to max that out, pull it back out for that reason. The one thing about the DCFSA is if it's use it or lose it. If you don't have those qualified reasons to pull the money back out of it, that money is gone. So it's not like, oh, you can pull it out for an unqualified reason and pay a penalty on it like you can on other types of accounts. DCFSA is you load that account in, you can pull it out for those daycare, summer camp, nanny type after school expenses. And that's it. You can also use it for certain types of adults that need certain types of care, but it's primarily used for children. You can do it up to age 13, but your opportunities drop down. So that was one of the things I put on my LinkedIn today is the different age-based milestones. At age 5, we start to look at, okay, maybe if they don't have a lot of extra nanny care or after school care or summer camps, then maybe they don't necessarily need to load it with the full 5,000. Let's check. It's just a let's check kind of moment. 529s, of course. So as your clients are approaching having children, so even before they have children, I love loading up 529 accounts for clients before they have kids, before they start to have all those daycare expenses and things like that too. So this is something to start with even before that point, and then talking to them about UTMA, UGMA opportunities. Knowing kind of when they potentially age out of tax credits, if they were eligible for them, that's another opportunity on the Holistiplan list, is being able to spot when they hit that age 13 for both the DCFSA age and then also the child care tax credits. And then at age 16, I have a couple milestones here. So I like to check in on age 16 for custodial Roths if they've earned income. This is a big one that clients don't think about, is when their kids start to have a little bit of income, potentially doing some Roths for them. Hugely powerful to just do a little bit of money into a Roth for somebody who's in their teens, and also a learning opportunity for the kids to learn about saving and investing, and also insurance planning for new drivers. So statistically, somebody's going to start driving at 16. They're very likely to have an accident before they're 22. So that age range, that window of time, makes sense for them to go review their insurance documents. And then also, if they own a business, does it make sense? One of those cases where income shifting makes sense. So, which just means maybe they're involved. So in the parent's business. So I have a client who has an LLC, bunch of rental properties. Their 16-year-olds handle some of the lawn care and maintenance and work for the family business and get paid to do so. So that could potentially be an opportunity. Obviously, don't pay a 2-year-old to do your accounting for your business. Be reasonable. That is tax advice. So that's the line where the CPA is typically going to say, is this something that makes sense? So income shifting could make sense. Usually it's a go talk to your CPA about this. That's definitely something that we don't say whether they can or can't or should or shouldn't. Also on what's deductible. Should they or should they not? That's really a CPA question too. But what we like to do is be able to identify the opportunities and be the one to bring it up. Be that person for your clients, be that thought partner, be that partner to their family on those different types of opportunities as well. So age out of tax credit, so child tax credit, so that age out, and then healthcare power of attorney, age 17 ultimately is when you want to start thinking about it before they reach that age 18. Age of majority, different by state, different by account type. Just check your state and figure out what that age of majority is. Proactively help your clients' children get those accounts shifted over from that UTMA, UGMA environment into individual accounts for them as well. Age 25 and a half, or really age 26, aging out of that parent's healthcare coverage. So Michael, good point. Michael asks why some of these are not on the Holistiplan report. I just kind of threw in a couple additional ones that I wanted to hit that I think about when I go through this as well. So if you are kind of crafting your own internal list or process to kind of do check in or do these proactive check-ins, think about looking at Holistiplan list is the easy way to pull the report, but I added a few additional planning opportunities as well that I think about. Any age, of course, so none of these are going to specifically come up on Holistiplan report because a donor advised fund can be done by anybody. Deduction bunching, capital gain or loss harvesting, inherited IRA distribution strategy, all the retirement account contribution strategies. So should they contribute Roth versus pre-tax? Those things can be modeled out in scenario analysis. HSA contributions, Roth conversions, tax bracket management, so topping up tax brackets. These are things that can be done for anybody. And then we get into this like pre-retirement time frame. So when I think about kind of the age-based reminders in my head, I kind of think about there are ones that are related to parents with kids, and there are a lot of reminders for people who are that pre-retiree, retiree kind of phase. So this is something where I think if you're going to pick one or two or a couple of different areas to start doing some age-based milestone reach outs, this is kind of an ultimate one that we want to do here. So reaching out, letting them know, yep, this is, you've now reached this age. You be the one to tell them that. That's great to come from you. HSAs, also teaching clients. So working with kind of those mid-career tech professionals, I do have clients that have that early-ish retirement strategy where maybe they're retiring at 55 or 56 or 57. So teaching them about that rule of 55, being able to take money out of their 401k plan from the employer that they just left at age 55 or later. That's a nice planning opportunity for people who want to pull money out without penalty. So if you have clients that are kind of falling into that age, educating them on that opportunity. Because a lot of times when I start to hear people say a particular age for retirement, like I'm retiring at 65, what do you all think about? They're waiting for Medicare, right? So, but what if you started to help them with a little bit of healthcare planning prior to that point? Or I want to retire at this specific age because I want to retire at 59 and a half. I had a client last year retire at 59 and a half, literally on the day, because the 10% penalty was removed, but they had taxable assets, they had cash. So they kind of came to me when they'd already made that decision and kind of added that date. But that's something where if they're starting to share these ages with you, ask them why. So if they're saying, I want to take Social Security at a particular age, ask them why. What made you choose that age? What made you choose that retirement date? You said you want to work 3 more years. Why is that? So being able to support them and understand what those kind of watermarks are or milestones are in their heads, and being able to support them through some strategy that might get them around that. So thinking about age 55, early retirement, they very likely don't know about that rule or that opportunity and might just say 59 and a half when you can get them out of there earlier. So that's a really good planning opportunity to educate your clients on. So some of these different types of rules, we have blog posts on our website that we create, but a lot of times the genesis of the creation, actually have this on a prior slide, how things have just happened within our firm is typically I'll create a LinkedIn post. It'll turn into an email newsletter. It'll then turn into a blog on our website. Then we figure out some personalized communication for our clients, and then that year-end email goes to everybody. So being able to just be the person who's sharing that information with them is huge. Teaching them about that age 59 and a half, those opportunities. So Holistiplan can help you pull the list of which clients are reaching potentially in-service withdrawal opportunities. So you can get them out of some of their really limited menu of 401k investment options and get them supported into some different options that might make more sense for them, that are more retiree oriented. Penalty-free IRA withdrawals, of course. A lot of people know that one, the larger catch-up opportunity that now exists. And then age 62, so starting to pay a little bit more attention to where they are on those IRMA brackets. If they're planning on retiring at 65, they're looking back 2 years, right, on those tax returns when they're determining that Medicare cost. So when the client is approaching those ages, just thinking how that's going to affect those future tax returns. And now, if you guys saw the presentation from last month on the Roth conversion tool, even if you think that a Roth conversion doesn't necessarily make sense for your clients, use it for the IRMA tool. This is so cool. Being able to calculate for your clients, especially that are approaching that age 63, 64, 65, and they're going to be enrolling in Medicare, that additional cost for their Medicare related to their income, being able to predict that is very useful, and being able to educate your client on that is very useful as well. I talked to all my clients about IRMA. I talked to a 34-year-old client about IRMA the other day because I wanted to talk about why we're making tax moves now that impact the future, and what we're potentially trying to save them on future taxes and on future the IRMA payments that they might be required to make at that time. Social Security decisions, of course. So being able to just let them know, yep, this is the earliest age you can take it, or final age. I have run into clients before that didn't file at 70, that really ultimately need to. Tax efficient withdrawal strategies. So ultimately being able to guide them through those decisions, Medicare filing deadlines as well, and a few more here. So final Social Security decision, qualified charitable distributions, so QCDs, being able to educate your clients on that topic. Required minimum distributions, especially since that's changed. I still have clients who think it's 70 and a half, right? So that's changed several times in the last few years, being in front of your clients to educate them and be proactive about when that's going to be. But also, had a meeting today. I had a lot of meetings today. I had a meeting today with somebody who is really earlier on in her career, and we were looking at her overall tax plan. And she said, what's causing my income to go up when I'm 75 years old? And so being able to educate her a little bit more about, yeah, we're thinking about RMDs now, because those are big income years that if you just kind of set your plan and let it go and just save in all pre-tax accounts and don't think about those early retirement conversion opportunities, or don't think about other opportunities to optimize your tax plan, you're going to have this big old bucket of pre-tax IRA money at 75 years old. You have to take big chunks out of it, and there are going to be some big taxes associated with that. So that's a topic to educate on early, but of course, just staying in front of that as the clients approach those ages, being able to support your clients through those questions and have them not go to Google and not go to AI, because those are not accurate tools to be able to guide them for them to come to you. And then ultimately just helping them understand what happens at their passing. So state taxes, gifting limits along the way, basis step up, charitable legacy planning. So there's so many opportunities, right? So if you're thinking about, if you like to have specific topics that you talk to your clients about on an annual basis, and you're kind of looking for something to cover across your base, or you're looking for a proactive check-in opportunity, you've got some bandwidth, this is a really good place to start, is to go into filter the age reminders, go into the reports, figure out which report you want to pull. So what do you want to focus on now? So how many of your clients have kids that you have date of birth in the system that might be losing that health insurance? That check-in just to say, hey, I know that Seth is reaching this age. Maybe it's time, or does he have a plan to kind of come off your healthcare? Does he know what's going to happen at that point? So being able to push them to take some action that might be relevant to that age group might make sense as well. So utilize this list here to help guide you through all of these opportunities to reach out to your clients and be the source of information for them. So I have another question here for your high net worth clients. When a child starts to drive, may want to consider umbrella insurance if they haven't already done so. Yes, absolutely. So reviewing insurance coverages, reviewing deductibles, reviewing, including that umbrella insurance. Those are all really good opportunities to review that insurance level and make sure it's appropriate, because of the likelihood is increasing. And I know that people bellyache about adding their teenage drivers onto their insurance and the cost that it adds to it, but it is not the time to cut back or scrimp on coverage, right? So you want to potentially review that really thoroughly at that time and say, yes, it's going to be a little bit more painful for now because these young drivers are going to be more expensive on your insurance, but it's not the time to cut back on that coverage. Same thing with an umbrella. Definitely want to have that coverage on there. And then as they get older, having, even if the parent still wants to cover that car insurance for their child, potentially just getting them their own policy. So that ends up costing a little bit more to do it that way, but also then kind of puts a wall between the child's finances and then any action related to them driving, and then potentially kind of insulating the parents from that responsibility because it's not the parent's insurance. So that's something that from a planning perspective, that's a really good point that you added about the umbrella insurance. Okay. On the pricing page, so that's pricing question. I'll have Holistiplan respond to you on that specifically. Does Holistiplan make recommendations for qualified plans for single member businesses like 401k profit sharing defined benefit? No, so there's not a solve feature for that. That is one thing that I love about Holistiplan is there are constantly developing tools. I kind of picture all of the developers at Holistiplan like constantly working really hard all night, every night, because there are new features all the time. So that is something that potentially I would reach out and ask them to potentially work on that. But ultimately, deciding how much can be contributed, there's a lot more that goes into that. So usually it's the third party administrator, right? The TPA that's involved that will help do the calculations. So for somebody who has a small business that has employees, potentially what type of contribution or retirement account strategy makes sense for them, or for somebody who owns a business. If you've never done this, go look at the IRS page on determining how much somebody can contribute to a 401k plan and the calculations that have to be made. This is something that a CPA that can handle that for your single member business for 401k. It's very useful for them to have the software that they do to run those calculations. So based on revenue that they have and what they're able to contribute for their own contribution, but the employer contribution as well, what they're eligible to contribute. Definitely talk to the CPA about that. It's a little bit more complex, especially if they start to have other businesses that they're associated with or employees. That's also why there's not really black and white answer on how much they can contribute. Clifton asks, are you communicating these to clients individually or as a group if they fit in? So individually. So when I pull a list of the number of clients who are turning 50, I think last year I had 5 or 6. So literally same email, just fired it off to 5 people. And it looks really personal. It is personal, right? It's a personal touch base coming directly from me. So I do feel that that's important in my communication strategy, that ultimately I like to blast things out. We have our app. So we put information into our app for all of our clients to look at, kind of like a news feed. We also put things into that year-end email, that December 1st email that goes out. But I also like to then reach out and say, Allison, yep, you're turning 50 this year. Just remember to take advantage of this potential opportunity. Let me know if you have any additional questions. It's literally 1 sentence, 2 sentence. If you guys do a texting system, you can schedule texts out. So like we schedule birthday texts for our clients. We schedule certain reminders or milestones. We also send texts compliantly as well about certain milestones that they approach as well. So getting kind of organized and figuring out what communication strategy makes the most sense for you would be just, I would start first with which items do you want to potentially do a proactive reach out on, who does this impact, and how do you want to communicate that to them? And I would suggest doing it more than once, more than one way. So if you have a LinkedIn that you're posting on, put that out there on LinkedIn, put it in your email newsletter, and then do a proactive one-off reach out to those clients. Think about if every single day you came in and did one proactive reach out to your clients, that would add a massive amount of value to them. So I have basically reminders set to proactively reach out to this client, and then this client, and then this client, and then this client. So I've got a list of people to potentially reach out to. And this is a huge way to kind of start me thinking about who to reach out to and why. I will be surprised if this didn't jog some ideas for you guys to be thinking about ways to potentially reach out to these clients. Okay. So I do have some additional time. I'm happy to answer some additional Q&A. I know some people did ask some what they considered more off-topic things. But if you want to ask about anything that we do from proactive reach out perspective, I'm happy to answer that too. But just get that scheduled. I did give just a couple sentences on here. I love doing that. I was thinking about you today. Have you done this yet? I like putting the work back on the client. So what I think of too from a value perspective is if clients are busy doing stuff and accomplishing, you will get credit for that. So I'll give you a couple examples. Our newsletter today that went out to our clients was about having financial date nights with your partner, and we gave them lists of questions to ask each other. So, right, doesn't involve me. It doesn't create a new meeting, doesn't create any new work, but we're giving them a tool. The other thing that we're doing is kind of putting some of these quick rules or tips in here as well. So do you have a kid age this age to this age? Have you looked at a dependent care FSA? Here's how it works. Check with your employer and see if you have one. This is something you can roll at during open enrollment season. So being able to use that LinkedIn, use that email, use that blog to continue to educate your clients so that they're coming to you directly for anything. I tell clients that we can typically answer questions on everything with a dollar sign next to it. So that includes answering those questions about insurance for their kids when they approach driving age, or getting them off of their insurance when they really should be on their own policy. Talking about those estate planning documents. So looking at or nudging them to go get estate planning documents for their kids, or helping their kids with some resources to help get them kind of started on the right foot. So potentially doing a custodial Roth, or having an UTMA or UGMA account, or learning a little bit more about investing. Sometimes it's just tasking them with doing. So if you give them things to go do and be busy, they feel that they're also getting a lot of value from that as well. So think about this as not necessarily creating that extra work for you, but creating an opportunity for you to increase your service level as well. One thing I wanted to hit too, I'll answer a few more questions. I forgot last time to share my discount code and people asked for it. So I do, Holistiplan gave me a discount code for if you are not a subscriber and you would like to try it out. There's a free trial for Holistiplan. You do sign up, there's a 10% discount if you use this code from coming to this webinar today. So Emily Rassam 10 is my code. So I will be happy to answer these additional questions. So can you elaborate on the app? So the app is something we do through a company called Financial. It's with a Y, Financial. So Financial, we white labeled an app for our clients where we use it as a communication tool, but also it pulls in their performance software. It pulls in their link to their financial plan. It also allows us to push out communications to them and have them communicate back up to us. And it allows us to give them some additional tasks. So we work with more tech-oriented clients, so we felt that having an app was important to us, and so that's something that we launched in the last year. Somebody asks if we recommend Jump AI. Yes. I generally like to pick tools where I feel that they're listening to their subscribers and making enhancements. So Holistiplan, for example, every time I log online, or every time I attend a webinar, or every time I turn around, there's a new tool or feature or upgrade with Holistiplan. I mean, look at the tax report 1.0 to 2.0 change and all those improvements. Looking at some of the different tools that they're rolling out, like that multi-year Roth conversion tool, I feel that I like to work with tools that are constantly innovating and growing. So when I was approaching the note-taking softwares, what I liked when I interviewed the different common ones is that Jump feels like they're constantly working on it and taking that feedback and improving. And every time I log online, there's something new and different and better. So if you're not using a note taker, I think that's a good thing to review as well as part of your tech stack. I feel like it saved me a lot of time. And that's the other thing with tools that I use. Does it save me time? Does it make it easier to communicate with clients? So sometimes one of my LinkedIn posts about Holistiplan was really about how you can know about a strategy like doing Roth conversions, but being able to, I call it the storytelling age, being able to show clients the reports and how that all looks is an important part of how we communicate with clients. So that's something that I look at as well when I'm looking at different tools is not only do I have to have this knowledge or understanding of it, but I have to be able to communicate this to clients and show that to them. So sure, there are a bunch of different age-based milestones that you all know, but do you have a strategy to pull that report, and do you have a strategy to communicate out with the clients? That's just one thing I'll challenge you with, is just kind of building those systems to be able to repeat that process and do that as well. So final question here, I'll answer one more. Peter, looking for good ideas or support on newsletters. So they use basic FMG for email. That's great. There's a lot of those pre-built emails that you can get through FMG or Snappy Kraken or some of those different types of tools you can buy content. What we tend to do is we actually create our email newsletter out of our LinkedIn content. So the couple of us on our team that post, we tend to kind of come up with content and then we polish it into a quick email newsletter. So we'll typically take one or two of our posts, turn that into an email newsletter and get that pushed out. So right now we are creating our own content for our email newsletters just because we are content creators in general. and that works for us too. But in the past, we have used tools like FMG and Snappy Kraken to help augment or support that type of effort of creating that material.
Hey, Emily. Awesome presentation. I have a question for you.
Yeah.
So for our advisors who are just getting started with tax planning this tax season, do you have any tips or tricks on how to get started before you have a physical tax return in your hand?
Yep. So how ultimately, so usually the way that clients kind of enter into the Holistiplan system, right, is that people will have a tax return, they'll upload it, and then all of a sudden they'll start to play with some new tools. But there are tools that are available, like even just this age-based milestone report. It's actually not related at all to their tax return. Having that client in there allows you to then have them on that report. So I would enter every single client in there and just get organized and get ready so that if your clients are already built in there, their dates of birth, their children's dates of birth are in there, some additional details are in there when you have that tax return. So we're about to get hit, right, with completed tax returns from these CPAs. So when that's ready, then you'll be able to upload it right into that household because it already exists there and all the ages will already be in there as well. So there's value in that too. And then when you go to look at your household dashboard, you're going to be able to easily see who do you have a return for. That's one thing I like to look at. I never share it on here because my Holistiplan has my clients' names on it. So there's certain pages I just don't ever go into on these presentations. But that's one thing that I look for is I can easily scan down and like it's color coded who has a 2024, 2024, 2024, 2024 return and who's missing one. So it also allows me to just stay organized about who do I have data for, who do I still need it for, and then who like who's on my client list that then now has these milestone ages that I need to potentially pay attention to.
Yep, super good feedback. That's one of the most common questions is how do I get started before I even have that in hand? And to Emily's point, I think getting the customers in there is the first step. And then the other thing is right now is a really good time to start playing around with the software. If you've never demoed it or if you've never trialed it, this is a really good time to get in there and start testing it. So one of the cool things that we have is we have a couple of sample tax returns that people can go in. So we have Peter and Paula Professor. We also have a couple of different retiree models. So whatever the most common use cases are, we have 4 or 5 different tax returns that are nobody's real tax returns, but they're really like scenarios so that you can upload it and you can see how they would be different and start testing out how you would model that for some of your clients before you get slammed with the real tax returns.
Yeah, absolutely. And it's this really good time. And you always hear me talk about workflows and processes. It's just saying, okay, once we get this, what are we going to do next? And so building out that workflow in your CRM system and just having that process ready to go so that when they come in, I know exactly what to do, check that item off, and I know what to kind of where to take the client next.
Mhm.
Mhm.
And then the other thing is Emily has done a number of these webinars. So if you go to Holistiplan's YouTube, you can just search up for Emily's webinars. I think you've done like 6 or 7 or 8 of them, but they're always super, super impactful and super empowering. So if you have time, it's a great use of your time to go back and kind of rewatch how Emily talks about how she's built out her processes. She's outlined a lot of really good practices for advisors to adopt in there.
Mhm. Yeah, absolutely. Thank you.
Gail says, Emily is outstanding, exclamation, exclamation.
Thanks. Thanks, everybody. Appreciate you coming today.
All right. Well, I think with that, it makes sense to wrap it up. We have 2 minutes till the top of the hour. So I want to say a huge shout out. Thank you to the advisors on the call. Thank you to Emily for sharing your wisdom. And we'll see you again on April 2nd. So really looking forward to it. Thanks, everyone.
Bye.